More big profits at Goldman Sachs and more anger over huge salaries and bonuses.
Money for jobs!
That's for banks!
Money for jobs!
That's for banks!
Goldman earned $4.8 billion in the fourth quarter, thanks in part to its profitable trading business and smaller compensation packages. Salaries, more than $16 billion worth, accounted for about a third of Goldman's revenue, the lowest annual ratio ever for the company.
The main strength in the quarter was the lack of putting money aside for compensation. You know, pay packages at Goldman have been a big issue, and they basically decided to pay none of their profits of the fourth quarter into the bonus pool. So that accounted for almost $3 of the gains.
Goldman has long outperformed its competition. Last year alone, it earned more than $13 billion, almost as much as the five other big national banks combined. But those huge profits have often involved excessive risk-taking in the minds of critics, risks that the Obama administration is no longer comfortable with.
If these folks want a fight, it's a fight I'm ready to have. And my resolve is only strengthened when I see a return to old practices at some of the very firms fighting reform.
President Obama said the government should have the power to limit the size and complexity of large financial institutions, as well as their ability to make high-risk trades.
Banks will no longer be allowed to own, invest, or sponsor hedge funds, private equity funds, or proprietary trading operations for their own profit, unrelated to serving their customers.
The feared long-term effects of Obama's proposal had an immediate effect on Wall Street. Stocks tumbled more than 200 points, and shares at Bank of America, Citigroup, and J.P. Morgan Chase each fell more than 5%. Mark Hamrick, The Associated Press.